Well, good evening, everyone. My name is Dr. Travis Hoffman. I serve as our University of Minnesota and North Dakota State University Extension Chief Specialist. And we are excited to again offer an update on a lamb market outlook webinar. And again, so we've been putting on webinars within our particularly NDSU and the University of Minnesota teams since May of 2020. So this is July of 2024. So appreciate those that have been willing to join us on, in fact, here in Fargo, America. A beautiful evening, and hopefully it's lovely where you're at as well. A couple of things just for some housekeeping is that we do have the chat box open. Please feel free, if you have entered, to fill out the opening poll that we have for us. But we have primarily individuals that have sheep. Some have sheep and goats. From an experience level, majority of our group within this particular one has actually had animals for over 11 years. And of course, it's going to be a wide variety of what they have in their herd or flock size for us. So again, put your questions in the chat box for us. And we have the great opportunity to learn from Dr. Tyler Cozzens. Appreciate the chance for him to join us. So Tyler has been highlighted for those of you in the sheep industry. He's given some talks at our American Sheep Industry Association meetings and has been a guest collaborator and sometimes puts in articles in the monthly magazine or newsletter that ASI has put out there. I've gotten the opportunity to work with Tyler. Tyler grew up in Colorado, okay, so comes from a cattle and sheep background in north central, northeastern part of Colorado. Did his graduate or undergraduate and graduate programs at Colorado State University. In fact, Tyler and I once took an ag economics class, and he was able to make it a career. I had to go elsewhere, all right? And so shift towards closer to the sheep. But it's really good that we have, even when we think about it, our sheep, lamb, and wool industries, a colleague that knows and understands it. And previously, he had been focused here on our lamb markets. But also now, it's exciting to share that, as you see on his title slide, is that he is the director of the Livestock Marketing Information Center, and he'll be able to describe some of his introductory information there of if and how that information center works as a group, but certainly recognized nationally as the premier people to kind of pull together a lot of our ag economics and learning for us here today. Tyler, I'm going to pass it on to you.
Thank you, Travis. I appreciate it, and appreciate the introduction and opportunity to come speak to you folks, and so hopefully give you some insights and background on kind of what's going on with the sheep and lamb industry and just the markets in general. But that being said, we'll kind of get started with some things here. So first thing I want to just kind of highlight, Travis gave a bit of a brief background on LMIC and who we are, what we do, but to highlight a few more of those things. So we actually are a nonprofit organization. We're housed under Colorado State University, but our sole mission is to support the extension effort across the U.S. And so you can see here from the graph on the upper left, or the map of the U.S. on upper left-hand corner here, we do work with 29 land-grant universities. And so our mission is to develop market analysis, research, and specifically a lot of data gathering and dissemination to our land-grant universities to support their respective extension missions and land-grant missions that they're doing. We also do work with 15 associate members. Travis had highlighted ASI, American Sheep Industry Association. They are an active member of ours. A few others that you might recognize: American Farm Bureau Federation, National Cattlemen's Beef Association, National Pork Board. We do work with all those folks. And as Travis did say, I do write for ASI's Sheep Industry News magazine that comes out once a month. I'm one of those contributors to that. Also, we do work with 8 USDA agencies as well to just support their mission and what we do here. So with that being said, let's get going with what we're going to talk about here for this evening. Quick outline, things I want to talk about broadly here: sheep and lamb inventory, forage and crops. and then we'll spend a bulk of our time on just market update and outlook for the sheep and lamb industry. So with that being said, I just want to give just kind of a high level discussion here as far as sheep and lamb inventories go. Now, the one piece of information that we get once a year is our January 1 sheep and lamb inventory levels. And so you can see here, just all sheep and lambs was actually down about 2% as of January 1st, 2024. One of the things that I'm kind of looking at here is that breeding sheep and lamb side of things, that was down 2%. That's kind of an indication for us as far as just producer intentions for the next few years. A little bit smaller sheep and lamb breeding flock there, so potentially an indication as far as just inventory levels going forward. Potentially a signal that we'll see further declines in just all sheep and lamb inventory levels there. So kind of the big things I'm looking at there from just the sheep and lamb inventory side of things, from forecasting standpoint specifically, and the work that I do here. So just kind of graphically showing where the general trend of just overall total sheep and lamb populations here. And so you can see that just a general downward trend over the last 20 to 30 years here. And I put in there the green bar at the far right, my expectation as far as January 1, 2025, total sheep and lamb population sitting at about 5 million head. That's about 1 to maybe 2% decline from where we were as of January 1st, 2024. So still kind of in line with that general downward trend that we've seen over the last decade here. Now, kind of looking at this from just a national perspective here, specifically on a state level, you can kind of see where those sheep and lamb numbers are as of January 1st, 2024 by a state level. So kind of looking at the northern plains there in the Dakotas, Minnesota, you can see that we're sitting at about 111 there in Minnesota, 210 in South Dakota, 63,000 head in North Dakota. You kind of see where those pockets of more of the sheep and lamb are in just Montana, Idaho, Wyoming, Utah, Colorado, and then you have those pockets in California and Texas as well. I think a little bit more of an interesting take on this is just the percentage change from a year ago as far as sheep and lamb inventories from January 1, 2024 compared to January 1, 2023. So you can see the red areas there, those states where those are the pockets where we've seen declines as far as sheep and lamb inventories, and kind of pointing out there kind of the Dakotas and Minnesota seeing some declines there of about roughly 1 to almost 9% there in the northern plains. But generally, most of those states that had larger numbers of sheep and lamb populations, seen declines over the last year. And so kind of watching those a little bit more closely. Now, switching gears and kind of talking some of the discussion wise here as far as just overall inventories, I kind of pointed out the breeding flock side of things. And so you can see here from just a trend standpoint here, overall lower numbers as far as the breeding flock goes. You can see my expectation there in the green bar, sitting at about 2.8 to 2.9 million head as far as breeding flock goes in 2025. That's my expectation as of January 1, 2025. Now, looking at it from a graphical or just a map standpoint here, you can see where kind of those pockets of breeding used 1 year and older as of January 1, 2024, where they kind of sit. A lot of those are in Texas, California, and then kind of the intermountain region there of Wyoming, Colorado, Utah. But you can also see there's definitely a strong base there in the northern plains. And just kind of like I had shown before, just kind of looking at a year-over-year change in just the breeding flock side of things. See lower numbers there in the Dakotas and Minnesota. But overall, in most of the higher populations for just lamb inventories in general, seeing lower level breeding flock across the board there. So definitely something that I'm watching as far as just inventory levels moving forward over the next year to one to 2 years, kind of those expectations as far as available supplies moving forward. So that kind of gives us some of the big picture discussion as far as just where we kind of stand as far as inventory levels. So now let's start digging down a little bit farther into kind of some of the nuts and bolts of things, where we kind of sit. And one of the things that I always like to try and talk about is just forage and crop conditions, and where we kind of stand as far as just feed availability for the industry and for producers. I think this is kind of a good point to just sort of highlight some of these things, because it does kind of shape some of the decision making for producers moving forward, how they're going to make decisions just from a a production standpoint, do you maybe breed a few more lambs or not? And what does that look like? Because every operation is a little bit different. They're resource based, and so I think it's always good to kind of get sort of a picture of what's going on there. I think a good way to just sort of start off with that is just looking at the drought side of things. And so I typically use this U.S. drought monitor map because I think it kind of gives us an idea of where we kind of stand as far as just moisture conditions and just drought in general, because that does start to factor into just overall range and pasture conditions and just feed availability overall. And so you can see as of the most recent drought monitor map that was released almost a week ago, they'll actually be updated tomorrow morning. So if you are interested, check that out. But generally where we kind of stand, you kind of look in the northern plains regions, Montana, Wyoming, definitely some dry conditions there. Definitely not seeing the D3, D4 kind of extreme drought, exceptional drought. But we kind of look down more into the southern plains of New Mexico, Texas, parts of Oklahoma and Kansas, definitely some drier conditions down that way. But it's we're also seeing some drier conditions over there on the east coast there. But if we kind of stick to more of our land producing parts of the U.S., definitely some dry conditions there. But I would argue from where we were a couple of years ago, definitely a lot better conditions, because about a few years ago, a lot of the western U.S. was in a pretty tough drought that was gripping it for quite a while. So we've gotten out some of that, so I think just from a drought perspective and just range of pasture, things are definitely looking a little bit better. Now, kind of on that same note, one of the things that USDA publishes on a weekly basis from May to October are range and pasture conditions, and they present this on a percentage basis, what is rated as good, excellent, poor, very poor. And so we specifically here at LMIC, what we look at is range and pasture conditions that are rated as poor and very poor. And we look at this on a regional basis as well. But just looking here specifically on the U.S. side of things nationally, so we're looking at percentage poor and very poor. So the thing to keep in mind here is a high percentage on the chart here means that range of pasture conditions are not good. So actually you want these numbers to be lower, a lower percentage here, meaning there's a lower percentage rated as poor and very poor. And so big picture to kind of pull away here, we can see that actually as far as where we stand for range of pasture conditions nationally, we're sitting pretty close to where we were a year ago. We've been tracking pretty close to where we have been over the last couple of months here, slightly below where we have been over the last 5 years. So definitely that kind of reflects some of the discussion that we just had on the drought monitor map. Overall drought conditions seem to be not too severe, but generally nationally they're pretty much tracking where they were a year ago and over the last 5 years or so. Now, if we kind of start breaking this out by regions and kind of looking at the western region where we see a lot of our sheep and lamb production, can generally see that it's been tracking a little bit higher over the last few weeks compared to where it was a year ago. But if we kind of look at this from just a 5-year average standpoint, definitely tracking quite a bit lower than where we were. And so I think kind of the upward trend that we've seen here in the last few weeks, I would argue is probably being driven a little bit more by those pockets that we saw on the drought monitor map of kind of Montana and maybe Wyoming, possibly Arizona, New Mexico. Could be a little bit of the cause for a little bit of higher rating there over the last few weeks. But generally, from a overall standpoint, definitely tracking better than we have been over the last 5 years and only slightly higher than what we were last year. Now, digging a little bit farther and looking at Great Plains region, so this would kind of be your northern plains there of the Dakotas, Minnesota area there. Can generally see that since the start of the reporting season in May, definitely been tracking well below last year and the 5-year average. It's only been in the last few weeks that we've seen range of pasture conditions go above where they were last year, but I would argue still very good conditions compared to where we have been over the last 5 years. Looking at the southern region, so this would kind of be your southern part of Kansas, Oklahoma, and Texas. Definitely seen some a little bit of improvement here over the last few weeks, but pretty much tracking in line with where we've seen things go over the last 5 years and so forth. So really nothing too surprising there. from just a overall range of pasture conditions standpoint. So kind of some of that discussion, I like to highlight some of those things because I think that starts to start to play into a lot of our costs, our input costs, specifically from a feed standpoint. So, you know, looking at that, that starts to factor into just the overall hay prices as well. And so I think just sort of looking at this from that perspective, you know, generally drought conditions, range of pasture conditions, not really seeing anything too significant or out of the order. And so therefore, you know, overall hay supplies are actually looking pretty good. May 1 hay stocks were actually quite a bit than where they were a year ago. So definitely have a lot of just overall feed availability there. So that's reflected in these prices here, seeing that you know, the May price was actually sitting about $200 per ton. And so just real quick, the prices that are reported here on a monthly basis are actually reported for the crop year, which is from May to April. So if it looks a little bit off, it's because we're reporting these on a crop year here. But you can see that the May price there tracking very much where we have been over the last 5 years, and you know, almost $80 below where they were a year ago. So definitely some relief there on just the hay price as we start kind of this new crop year. You know, and looking at the other hay price, definitely seeing a lower price here as we started the crop season. It's actually a little bit higher than what the 5-year average is, but compared to last year, definitely a little bit better other hay price there. So definitely bodes well just on the input cost side of things to see a little bit lower hay prices there. Now, I always try to throw in a corn price there because that is one of those feed components that does eventually start to factor into just the overall production of sheep and lambs down the road here. If they go into a feedlot setting, just putting some corn in there is part of that input and cost side of things, and does factor into just the overall economics of the production cycle there. And so you can see that prices here, as far as they've gone for the last for basically the first half of the year, have been tracking between $4 and $5. Kind of, I would argue, an average about $4.50 there. That's quite a bit lower than where we were a year ago. I mean, we had started the year over $7, slowly made our way down to about $5 and been below $5 for going on about 9 months here, potentially approaching a year here. And so one of the things I've mapped out on here as well are the futures prices. And so you can see that the orange kind of dashes there are current future prices as of the closings of earlier today. And so you can see the expectation as far as the market goes is that corn prices are actually expected to track about $4 here for the remainder of the year. And even the green dashes there getting into 2025, looking at prices that are just above $4. So arguably corn prices here for the next year to year and a half are looking to be around $4, mid $4 range there. So definitely from an input cost side of things, definitely lower costs there for corn for those livestock producers and sheep and lamb producers. So that kind of gives us some of the discussion on the feed side of things. Now let's start moving into kind of the supply side of things and some of the discussion there on just overall sheep and lamb production. So kind of starting off here with just overall slaughter of sheep and lambs on a weekly basis, year to date through the first basically 6 months of the year is actually up about 4%. I would argue this is, I was not expecting this because, you know, the overall just inventory levels are, as I stated at the beginning of the presentation, you were actually down 2%. So to actually see a little bit higher sheep and lamb slaughter wasn't quite expecting that, to be honest with you. But I think there, you know, some of this in the next slides I'll show you is mature sheep slaughter. We've seen a little bit higher rate of that. But in general, they're tracking about 4% higher than where we have been. I'll show you my expectations here as far as production here in a few slides, but expecting overall slaughter through the remainder of the year to actually be up about 1% for the 2024 here. Now, as far as mature sheep slaughter goes, that was one of those things that I noted. This is actually up about 12%. So a lot of this 4% growth that we're seeing in sheep and lamb slaughter is partly due to just a higher mature sheep slaughter. So actually tracking about 12% higher. And I think this is something to note. And from a forecasting standpoint and just inventory levels, seeing a 12% increase in mature sheep slaughter is an indication that, should we expect a lower breeding flock number when we get to January 1, 2025? And so that's something that I'm watching this year to see how that tracks through the second half of the year, because we've seen about 12% through the first half of the year. If we start to see a similar trend through the second half of the year, then what's that breeding flock going to look like come January 1, 2025? Is it going to be down more than 2%? But that being said, in the second half of the year, maybe they start pulling back on the mature sheep slaughter, and we actually see it start to trend a little bit lower than where it was last year. And maybe we do come out with not as much of a decline in the breeding flock side of things. But I think it's something worth watching and noting, just from a inventory standpoint, because that starts to factor into just overall market lamb availability as we get into 2025 and arguably into 2026 as well. So we're kind of setting that stage, looking forward here for the next 1 to almost 2 years. And so another way I sort of slice this mature sheep slaughter data is just taking the mature sheep slaughter on a weekly basis and dividing it by total sheep slaughter. So it's just a percentage of the mature sheep slaughter as a percentage of total sheep slaughter. So it kind of gives it an indication, are we seeing a little bit higher and faster pace of mature sheep slaughter than we have in the past? And so I would argue over the last 2 to maybe 3 months, we have seen a little bit higher pace here as far as just a percentage of mature sheep slaughter as of total sheep slaughter. So this is kind of just another indication of, are we slaughtering a little bit more than we expected? What should we expect as far as just overall breeding flock size as we get to January 1, 2025? Now, one of the things that's been pretty interesting here over the last couple of years, we've definitely seen a lower trend in just dressed weights. So what I've noted here is year to date, actually the average dressed weight is actually down about 2 pounds or 12%. So we're seeing sheep and lamb slaughter up about that 4% that I noted. That's being partially offset by just a lower dressed weight. So they're getting the lambs through, they're marketing them, but they're marketing them at a lower weight, right? And so this starts to impact our overall production. But kind of just some things to note here. As we got into the second half of the year in 2023, it tracked quite a bit lower, well below that 60 pound range there for some of those weeks, but arguably averaged about that 60 pound range. So watching that this year to see if it tracks around that 60 pound range or if it moves a little bit lower like it has been through the first half of the year, because then that starts to impact as far as overall lamb availability through the second half of the year here. So definitely one of those trends that's worth noting. So it's kind of one of those twofold things. You see the higher sheep and lamb slaughter, but we have a lower dress weight that does start to impact our overall lamb availability. And you can see that is partially showing up here. So we have lamb and mutton production that is actually up 1%. So yeah, we had slaughter up 4%, but that 2% decline in overall dress weights is actually resulting in a 1% increase in lamb and mutton production through the first half of the year here. So, one of those things a couple of components there that I'm watching, just overall rate as we, the overall sheep and lamb slaughter rate here on a weekly basis, but overall those dress weights, how those are impacting overall production here. So we can see that there's some offsetting going on there as we get from a production standpoint. Now, kind of looking a little bit different perspective as far as just available supplies and so forth. One of the things I try to look at here is just overall cold storage. So this is kind of an indication as far as how product is moving through the supply chain. Is demand pulling that product through there, and so seeing May down 7%. To me, as an economist, the way I look at things, that is an indication that demand is strong, product is moving through. It's not getting built up in the cold storage, because if we start to see cold storage track quite a bit higher, then that's an indication that demand might be slowing down. Consumers aren't purchasing as much lamb as they would like to. Maybe it's too expensive there, or for whatever reason it might be. But we're not seeing that happen. And so I would say that's a good indication just from just an economic standpoint. The supply that is getting, the lambs that are getting slaughtered, the lamb production that is there, it is moving through the supply chain, and consumers are consuming that. So demand is still holding fairly strong here, considering where we are in just the overall broader economic spectrum here in the U.S. So watching this a little bit closely moving forward here, my sort of expectation that I have in my forecast here is we'll see cold storage track about 25 million pounds, maybe below that, kind of from a seasonal standpoint. That's sort of what I'm expecting as far as cold storage here. Not really seeing or expecting too much buildup in cold storage here over the next few months to the end of the year here. Now, we always kind of have this discussion about import side of things. We're definitely seeing an upward trend as far as imports go here. And I'll point out a few things as we get to a few more slides down here why I think this higher import level is happening. I think a lot of it's just on the price side of things. But, you know, I think one of the things to note is, yeah, we're seeing imports up 35%, but it's not building up in the cold storage side of things. So whatever we're importing, it is moving through the supply chain. It is getting consumed. So as far as just from the supply side of things, supplies are moving through. They're not building up, and supply staying low like that is definitely supporting prices as we stand right now. And I would expect them to the lower supply levels to still support prices moving forward. And then we'll get into those price discussion here in a few slides. So kind of looking at just the import side of things from a more annual perspective. Let me see the blue bars here. That's actually lamb and mutton imports from an annual basis here. So you can see 2021 and 2022 were some of those peak levels that we've had here, kind of that peak demand side of, kind of just getting on the other side of COVID and consumers at home still cooking a lot of their meals. And so demand was definitely very strong. But I have the red line here, which is actually the Australian exchange rate. And so you can see, I think the biggest thing I want to point out here is that there is a relationship as far as exchange rates and import levels here. So the way to kind of look at this is if that exchange rate is high, then that is a headwind to imports to the U.S. importing Australian lamb. Okay, so but if the exchange rate is lower, then it is easier for us to import lamb from Australia. Okay, and so you can see that there was that dip in the exchange rate there in 2021. That was also when we saw the highest import level there. Now we've seen the exchange rate take a little bit higher, and some of the highest that we've seen arguably over the last couple of decades here. So definitely a headwind to imports, compared to where we were in 21 and 22. But still some strong levels that we've seen here. I put in my expectation for 24 and 25 as far as lamb and mutton imports, sitting at about that 300 million pounds of imports on an annual basis there. So my expectation is that these exchange rates are still going to somewhat be a headwind to imports over the next 18 months or so. And so here's kind of a monthly representation of those exchange rates. So you can see since about 2021, it's generally been on an upward trend. So, that kind of upward trend over these last couple of years is definitely an indication that just Australia's ability to export goods, not only to the US, but just globally, an exchange rate tracking higher like that is a headwind to them exporting more product. It's more expensive for the importer to purchase goods from Australia. So that's kind of the supply side of discussion things. Moving to some of the price side of things as far as sheep and lamb, and I'll give some perspective on as far as my outlook and expectation for prices here through the second half of 2024. So the graph that I've kind of used quite a bit here I think it's kind of interesting to sort of graphically represent just retail lamb prices as they relate to beef, pork, and chicken. So you can see the green line, that is all fresh retail lamb price. And that is actually reported weekly by USDA AMS. So we aggregate this to a monthly level. And one thing to keep in mind that all the lamb retail price does factor in feature activity. So like buy one get one free, for example, would be kind of a feature activity. So arguably that price is not an apples to apple comparison to what we get for beef, pork, and broilers. Just because we're getting from a couple different sources there, but I still think this is a good representation to give you an idea of kind of where that retail lamb price lands in comparison to the other meats in the meat case there. And so you can see generally all four meats from a retail price standpoint have been tracking higher over these last couple of years. And so the consumer, when they get to that meat case, they're making a decision, which dollar do I want to, how much money do I want to put forth as far as the meat that I want to consume, what kind of eating experience do I want to have? And so they're weighing that and largely being price conscious moving forward here. So kind of delving a little bit more further into just overall lamb prices. USDA AMS releases weekly national lamb cutout values. So this is kind of that consider this sort of the wholesale value. By and large, what we've seen through the first half of this year, I've been tracking between about $460 to $480 per 100 pounds. So $460 to $480 per pound there, tracking pretty level there for most of the year. So really not seeing too much seasonality this year. But I've noted there it's actually up 9% or $40 per hundredweight compared to a year ago. So tracking very, very strong. And I would argue this lamb cutout value tracking at this level here is from an economic standpoint, there's still an incentive for Australia to try and market product in the U.S., even though the exchange rate may not totally be in their favor. The lamb cutout value is tracking high enough and well enough that they're crunching the numbers and seeing that it actually makes economic sense for them to try and get product into the U.S. And so, my expectation is, it's been tracking pretty steady here. I don't really see a reason to see it deviate too much here unless we see some economic factors come up to play here. But keep in mind that a strong cutout value like this is an indication that this all kind of ties together. A strong cutout value like this with lower supplies means that demand is holding strong, product is moving through. So that my expectation is the cutout value should hold fairly strong here through the second half of the year as we move forward. And so I think looking a little bit further at this cutout value, kind of breaking this out from the specific primals that factor into this cutout value, looking here at the shoulder price, we can see that that's been holding very steadily at or just above $4 a pound. That's actually up 13% from a year ago, $45 per hundredweight from where we were a year ago. And so don't really expect that shoulder price to move too much lower. So that's definitely supporting this cutout value that we've seen over the last 6 months, and likely to continue to support it through the next few months here. Same thing on the leg price, sitting well above that $500 per hundredweight there. You can see that as of last week, the leg price is actually up 27% or over $114 per hundredweight above where we were, tracking well above where we were a year ago. So very strong prices for that leg. That's one of those products that the Australians try to get into the U.S. So you see a strong leg price like this, even though exchange rates may not be in their favor, they're going to try and get as much of this product in here as they can. But definitely a strong leg price is supported for this cutout value, and this is overall supportive for just overall sheep and lamb prices moving forward. Loin is also one of those other high valued cuts here. It's up 13% or about $81 per hundredweight from where we were a year ago, tracking well above last year. And seasonally, it should expect it to climb a little bit more as we get into the second half of the year. So might see those prices get up there about $730 potentially here as we get into the second half of the year. And the rack is also one of those. in the recent weeks here, it's been tracking a little bit higher than where it was a year ago, but through a good portion of the first 5 months of the year, it was actually tracking a little bit lower than it was a year ago. And so watching the rack, that's one of those higher value cuts that definitely factors into the overall cutout value. But I think seeing it hold pretty steady, at or just below that $1,100 per hundredweight there is definitely a strong sign just for overall demand of lamb moving forward. So kind of bringing all this together, looking at all those individual primal values, that those all factor into this overall cutout value, and just kind of putting this cutout value graph in front of you again to show you just the steady horizontal tracking of this lamb cutout value is definitely supportive for just overall demand, the demand picture for lamb moving forward here. And so, kind of keeping that in mind, the strong cutout value, that starts to factor into just the overall value for the lambs that you're selling at sale barns. So you can see that, looking at the Sioux Falls price here on a weekly basis, there's been some very strong weeks here over the last few months, well above where we were a year ago. Have seen them track a little bit lower here in these last few weeks, but I would argue compared to where we have been over the last 5 years, definitely some strong prices for these slaughter lamb prices, specifically at the Sioux Falls market. Now, here at LMIC, I specifically do a forecast for the national negotiated live slaughter lamb price. And so you can see this last week, it was actually up 17% or $30 a hundredweight compared to where it was a year ago. And you can see here the blue line has been tracking well above last year and the 5-year average. So very strong prices for these slaughter lamb prices. Arguably a little bit stronger than where my expectation was at the beginning of the year, as far as my forecast went. But you can see there the green bars for Q3 and Q4, my expectations as far as slaughter lamb prices, where they're kind of sitting, just kind of around that $200 per hundredweight price range is what my forecast is from a national negotiated live basis. And so, you kind of take that expectation and factor it into the Sioux Falls price here. Probably a pretty good expectation for Sioux Falls price to be pretty close to that $200 per hundredweight there. Now, seeing those strong slaughter lamb prices, that has definitely boded well for just the 60 to 90 pound kind of feeder and slaughter lamb price. So we specifically here at LMIC look at the 3 market average. And so you can see just through the first 6 months of the year, tracked well above last year. And in the last few months here, it's been well above the 5-year average. So last week was actually up 19% or $35 per hundredweight from where we were a year ago. So arguably some strong prices there for 60 to 90 pounds. You can see at my expectations for a Q3 and Q4 in those green bars, sitting at about 210 for Q3, then moving a little bit higher to about 220 to maybe 225 for the fourth quarter are my expectations as far as prices go for 60 to 90 pound lambs. Now, one of the things I want to keep in mind here, or just kind of point out, is the seasonality here. So you can see as we get into the third quarter, that is arguably when we start to see the lowest prices for 60 to 90 pound lambs. So just kind of pointing that out from a marketing standpoint. Every operation is a little bit different on how they're structured, how they can kind of market things. But just from a seasonal standpoint, just some things to consider. Just from just price strength and just marketing of your lambs. Do you want to market them in this third quarter, or can you market them a little bit sooner or a little bit later? Maybe get a little bit higher prices. Really, all I'm trying to point out there from a seasonality standpoint. Prices are a little bit stronger just before and just after that third quarter. But we're kind of sitting here, almost to mid-July, and so kind of some of those decisions, do you have to keep going with that decision? Could you wait a little bit longer or not? But every operation is different. And so I just kind of wanted to point that out from just a marketing standpoint. So last few kind of slides here, kind of wrapping up some of the discussion here. One of the things that I worked on here at LMIC, and this was actually funding that came from ASI, American Sheep Industry, was to put together just an average returns for lamb feeders. And so this is for just a hypothetical lamb feeder in northern Colorado. So we have a few assumptions here. Lambs are purchased at 70 pounds. They're fed for about 3 months and then sold at 140 pounds. So really, this is just a gauge to kind of get an idea of what profitability is like within the various segments within the lamb industry. And so you can see here that over the last few months, the average returns to lamb feeders have actually been in the positive there. Arguably about a year ago, almost 2 years ago, returns were definitely in the red there. They were losing some money there. A lot of that was just overall marketing of lambs. Things got a little bit out of whack there, but we can see that things are definitely back on track here. Profitability's come back to those lamb feeders. Last couple of months here has kind of been mixed as far as profitability. Last month was actually down. So some of that decline in just overall returns to lamb feeders was arguably due to feeders purchasing those lambs right around that April timeframe. And you could see from just a price standpoint here, those some of the highest prices for the year so far. And so, arguably some higher priced lambs that they're bringing into those feedlots and putting the feed through them, and now they're selling them now. And so, the return has turned a little bit negative here in the last month. But I think as we kind of think about when they're purchasing lambs now here over the next few months, likely start to see this profitability over the next few months turn a little bit stronger. And so, I think it's a good thing to point out just sort of profitability from this standpoint here, because just from an overall economics of just the lamb industry as a whole, across the marketing levels, from the the lambing operation to the feeding operation to the slaughtering part of things, the slaughtering of the lambs and the purchasing of them from the consumer side of things, profitability along that whole marketing spectrum factors into just the overall health and well-being and just profitability within the industry as a whole. And so it's not really they're winning, we're losing. It's, are we all moving forward and making profit and just furthering the overall supply and demand picture for the lamb industry. Now, kind of on the lamb feeding side of things, one of the things that I've worked on here is a retained ownership sort of discussion here. And so the way to kind of look at this, I know this is a lot of numbers and a lot of things going on here. The biggest thing I want you to focus on are the red letters that I have there, okay? So if we take the example of the lamb feeding that I just walked through, and let's say you didn't want to sell your lambs to the feedlot and then they feed them out. You want to retain the ownership and sell them at 140 pounds, which is an option you can do depending on who you work with as far as feedlots and so forth. Biggest thing I want to point out here is if you did retain that ownership all the way through to a fed lamb, let's walk through kind of what that looks like. Okay, so let's say you have lambs at 70 pounds. Okay, that's that in weight side of things. So 70 pounds. If you're going to feed them to 140 pounds, then the number of days that they'll be on feed are 90 days. Okay, so that total feed cost is going to be $180, just over $180. Okay, now if we start looking at the table, then it comes down to what's your price expectation as far as what you think you will get for that market ready lamb, that 140 pound market ready lamb. Okay, I've kind of given you my price forecast, and that's basically about $210, $2, wherever you kind of think it might be. Okay, so if you factor that in there, and if we look at our returns, and this is just returns above feed costs, okay, so you basically will come out of that situation there, retaining the ownership, making about $114 per head. Okay. Now, if you think the price will be a little bit higher, say $230, then you're looking at a returns above feed cost of $143. But if it's going to be lower, say $189, then your returns above feed costs are $84. Okay. Now, these returns above feed costs do not factor in any costs that you, the producer, have on getting that lamb up to $70. Okay, so you have to factor that in there. But I think this is just kind of an idea of giving okay, I have these 70 pound lambs. I know what I have as far as a sunk cost in them. If I can retain them, right, and they get fed to 140 pounds, I can sell them for $210 per hundredweight. I can make about 114 bucks per head. Does that recover the other sunk costs that I have into the lambs? Okay. And so this is just sort of a way to maybe get you to think a little bit differently as far as just a marketing strategy. Because that's kind of a decision you might be making about this time frame right now is do I sell them at 70 pounds or do I hold on to them and sell them at 140 pounds? Well, this gives you an idea of the economics that might be at play here. Now, lastly, one of the things as far as kind of a marketing standpoint goes, I have a couple of scenarios here and kind of work through these with Travis as far as just some discussion points here. Just kind of some hypothetical situations here, put together two here, scenario A and scenario B. And so the biggest thing I want to point out here is sale weight, assuming they're 80 pounds. But I did put in two different sale prices here. Okay. And so $200 versus 240 bucks. Okay. So the idea here is that we have two scenarios. Okay. And so you have the potential to sell your lambs at two different prices, $2 or 240 bucks. The catch here is these are at two different sale barns, hypothetically here, okay? And one sale barn A is 100 miles away, sale barn B is 500 miles away, okay? Now we're making the assumption that you're gonna transport these lambs to whichever sale barn you want to take them to. And we have a fuel cost in there, so depending if it's scenario A or B, your fuel cost might be 40 bucks, might be 200 bucks, okay? And I have just in there a general overall mileage cost just for wear and tear on vehicles, equipment, and just time in general. And so that's either 100 bucks or 500 bucks. So your total transportation costs, hypothetically here, this is, kind of rounding some things quite a bit, I'll be honest with you, but hopefully gives you an idea of just some things to consider, okay? So your total transportation cost is either 140 bucks or 700 bucks. Okay, so a difference of $560. The thing I want to point out here is, okay, you have the opportunity to sell your lambs for $8,000 or $9,600. So your total return at the bottom line there is you're sitting at about 7,800 to 7,900 bucks if you go to the sale barn that's 100 miles away. But if you go to the sale barn that is 500 miles away, you're looking at potentially $9,000 as far as a total return. So that's a difference of well over $1,000. So the idea behind this is to get you to maybe think about, okay, if I do travel a little bit farther, is it worth it for me to get basically $1,000 more for selling my lambs? Okay, and so that's really all that the idea behind these two scenarios here is to maybe think about, is there an economic opportunity for you to potentially gain a little bit more from an economic standpoint? The economic terms that we use for this is marginal cost. Okay. And so arguably if the total return is positive, from an economic standpoint, you should travel to the sale barn that is 500 miles away because you are going to make more than $1,000 more than if you went to the sale barn that is 100 miles away. So that's sort of the economic terms, but I recognize that everybody has different priorities and demands on their time, their operations. May not be feasible for them to do that, even though they can make the extra money. I get it. But I think this is just sort of maybe just a simple example to get you to maybe think about, are there opportunities for me to potentially gain from an economic standpoint? So anyways, kind of wrapping things up here. Some things to consider, kind of going back to some of the discussion we had at the beginning here, drought and pasture conditions. Overall, things look pretty good. Feed costs are a little bit lower here as we, kind of get through about half of the year here, and arguably feed availability and feed costs are looking pretty good. And I expect them to stay fairly positive here as we get through the second half of the year. Now, I kind of almost have this inflation point in here, and overall, this is kind of gets a little bit more back to just overall just cost of production, from an input cost side of things. If you have higher interest rates, that impacts just overall cost of doing business, and that factors into this transportation discussion that I just had here. But this inflation definitely is kind of a headwind into consumer demand. We can see from just some of the discussion as far as just the overall supply, availability, and prices doesn't seem to be impacting consumers too bad as far as lamb consumption goes. So I think that's a positive thing there. But inflation has been pretty sticky here, and so as we get through second half of this year and into 2025, are we still going to have some pretty sticky inflation? I think that could definitely it warrants watching as far as just an overall demand side of things go. And I kind of gave you some of my expectations as far as sheep and inventory goes in 2025. Still kind of expecting lower inventory levels there. So kind of factor that into and just overall available supplies and just marketing decisions for you as a producer as we get into 2025, just sort of your expectations and things moving forward as far as decisions you want to make for your specific operation. My expectation is that inventories will be a little bit lower. So, I think every individual producer can evaluate that and the decision they want to make moving forward. But overall, thank you for your time, and hopefully this gave you a little bit more insights in as far as the sheep and lamb industry goes from a supply and demand side of things. And with that, I will end my time and pass this back to, I guess I had one more slide. There's my expectations for lamb production and prices there, but I kind of already outlined some of that stuff for you guys in the slides before, so I apologize for that. But anyways, thank you. Pass it back to you, Travis.
Yeah, thanks, Dr. Cozzens. First off, can you hear me better with this? Okay, good. You want to go back just your one slide? We're going to leave that one up for a second on your summary. If you can go back just one.
There, or do you want?
Yep, that's no, the one with your arrows, and we'll just talk through a couple of our inquiries and questions, Tyler. So appreciate it. So I thought that was a comprehensive evaluation, and appreciate everything that you're doing on pulling some of this information together for us. So I take away a big picture, so lots of things, and even from forages and the supply and demand, and kind of digging up through all those. But I think an interesting part there, of course, you brought up the amount of mature sheep of ewes and rams that are going to harvest, but I'm gonna move on past that. I did find that intriguing, but one of the things that I think is important for our industry, particularly when I think about it here in midsummer, is the carcass weight of those lambs that are going into the harvest, Tyler. And so some of the questions come through on here, and I know that we touched on it a little bit, but I think this is an important one just to kind of grab a little bit more clarification on. Inquiry is, why do you think our dressed weight is on the downward trend? And then I think probably a tougher portion of the question is, can we track dressed weight by region? And so I know that, that's potentially available as well. And so, or what could we look at? But let's talk about that. I mean, the fun thing is, even when we've seen prices become more depressed, it's commonly been lambs that had gotten large for our system. So I think there's great news on the cold storage, great news on what the lambs are. Let's talk about that for a little bit.
Yeah, and Travis, I think you're spot on as far as just as far as the economics go. The supply side staying tracking a little bit lower than it has definitely bodes well for prices. That is price supportive, is the way I'll phrase it. But I guess back to some of the dressed weight side of things in that discussion there. I think the thing you have to keep in mind that some of those lambs that are being harvested now, and over the last arguably 12 months or more, they were getting fed some expensive corn and expensive hay. And so, that factors into the overall economics, and they're kind of sitting there saying, okay, should I feed them an extra 1 week, 2 weeks, a month, or can I market them at a little bit lower weight? And I would say from an economic standpoint, they're probably saying, I'm not going to put the extra cost through them. I'm just going to market them now. And so they might be at a little bit lower weight, but that means I don't have to put that extra cost into them. I can get the return now. And so I think that's part of the picture now. The thing to watch though on that side is, I'd mentioned we got corn prices expectations sitting around $4. We've got hay prices that are arguably quite a bit lower than where they have been. From would the economics potentially bode in the favor of putting a little bit more weight on them, and selling them at a little bit heavier weight, knowing that we've got a price here that is sitting potentially over $2 for some of these fed lambs. So that's part of the other equation is, okay, now we've got some cheaper feed. Can we get them to a little bit heavier weight, get a little bit more return on them? Then that starts to factor into just overall supplies. Do we start to see a little bit heavier lambs? Does that start to show up in higher cold storage? Overall lamb there, the demand isn't pulling it through like it is now. And so I think there's kind of some factors that have to be in play here that we have to watch pretty closely here, as far as just overall production decisions moving forward. Does that kind of make sense there, Travis?
Spot on. In fact, you probably answered about 4 of our questions in one spot. Okay, Tyler. I appreciate the efficiency, because some of it just in the transition is one of the questions said, with feeder lambs, expensive in relation to imported lambs, and corn lower, is what do we got to watch for on some of those lambs getting heavier in the feedlot? Because as long as, what's caught us from a tough standpoint in some previous times is when the cost to gain is $1.25 and the lambs are $1.50, then we went from 160 pounds to 161 pounds and made a quarter, and so, I think you touched on that a little bit, of that if we can stay current, then that allows us, some flexibility and truthfully versatility in marketing of the lamb that goes on the backside of our operations.
Absolutely. I agree.
Okay. An inquiry, and again, this is kind of, I'm going to keep this one primarily on the supply side. But does cold storage numbers include imported lamb?
So that is a good question. I think that the simple answer to that is yes. Right, because a good portion of the product that does come in is frozen product, and so it is going to go into those cold storage facilities. And so I think that is important to keep in mind, because if we do start to see a buildup, are we starting to see a little bit more imported product come in? It's not moving through fast enough. And potentially there's too much product getting imported. But I would argue from what we're seeing as far as just cold storage, we're not really seeing that product that's imported getting built up in the cold storage. I would argue it's still getting pulled through the supply chain. Demand is there, pulling it through. Hopefully that gives some clarity there as far as that question goes.
Right, and thanks so much for adding in the important portion of the Australia exchange rate and discussing that. So many times we at least kind of think about what happens from a sheep standpoint to a lamb chop and everything in between. And I appreciate you providing some guidance and just some emphasis that what happens on the dollar to Australian exchange rate is really important. And, what's coming across the ocean or borders, right?
Well, yeah, and Travis, I'll kind of reiterate a point, and hopefully I conveyed it, but a lot of this sort of import side of things is also the fact you have to keep in mind is that cutout value. That graph that I had there, that cutout value holding around 460 to 480. The Australians, they see that price. They're watching that price, and they're crunching the numbers relative to their exchange rate to see, does it make economic sense for me to ship product to the U.S. if there's an opportunity, if they're looking to, if us as the U.S. are looking to purchase lamb, does it make sense for them to put it on a boat for 2 to 4 weeks and get it over to the U.S. Right? So that's why I kind of watch this cutout value pretty closely, and the Australians are doing it too, right? So they're crunching those numbers to see if they can make it work, even though the exchange rate may not be in their favor. But a strong cutout value definitely bodes well for them to try and get more product into the U.S.
Outstanding. Thank you, Tyler. I knew that this one is certainly a large part of it, and I think that this one can be evaluated from the map of changes on the shift of the sheep industry just a little bit to the east. And the inquiry comes as a major part of lamb consumption is fresh with the ethnic market and doesn't get recorded in some of the charts. Okay. And so Tyler and I have had these discussions before on how do we capture some of that information and capture some of that data and truthfully relay it to our producers. So what have you learned, and what do we know, and some of those things kind of pulling together on our sheep and the ethnic markets?
Yeah, I'll be honest with you, Travis. That is always a tricky one. Just data availability on that is pretty tricky. And so the I guess what I'll say is that the ethnic market definitely has a play. And some of my forecasting efforts that I do as far as just overall slaughter and prices, I've been tracking it a little bit more closely from a weekly standpoint and actually mapping out those ethnic holidays on a weekly basis to try and get a better idea of how the timing of those holidays, how they factor into weekly slaughter levels and just weekly lamb prices. I can't say that there's a noticeable relationship, but the trends are there. It's I know that's sort of a vague economics sort of dancing around some things, but I think there's still a lot of things at play, information being there to try and really piece all this stuff together to get a really good picture and say, yes, this is what's happening. But I think there are some relationships there. I'm not saying there's strong relationships there as far as the data availability that we have, but I think it is worth watching. I think the markets are definitely still in a transition to try and figure out what that looks like as far as the ethnic demand goes, and to see if so we're kind of in that transition to see if it's really going to start to show up in the data. If that makes sense.
Outstanding. And so a couple different things. I think one of the inquiries, to paraphrase for you, is cart, horse, horse, cart. We got to make the decision of which one's first here, Tyler. And the inquiry becomes is because there is actually a lower number of sheep in the United States, that there is the imports are filling that, or are the imports filling that, causing lower numbers in sheep? And the first thing that I would say, okay, before I hand it to you, Tyler, is that realize that at least, and I know this isn't with full stability because we have some volatility in our markets, but when you have the cutout of a lamb carcass cutout at 470 per hundredweight, if we're raising sheep, and I think when we look at it of potentially obviously having more than 120, or 150% lamb crop, if we can get to that, then those dollars should allow us to not be having at least the mature animal slaughter. So I'll just welcome yours. And again, that one's not actually more so of an exact answer, but I think that if we can keep or look at levels that we've currently had in this summer, there's certainly progress and optimism for the sheep producer.
Mm-hmm. No, I would agree with that, Travis. And I think I would like to think that, so the way I'll phrase this is that the lamb that is produced domestically is consumed domestically. So there is demand domestically for domestic product. I think it's up to the industry to make the decision if they want to really try and regain that market share domestically and keep the international product out. Because I pointed out that the cutout value is there for them to bring product in. The demand is there. I mean, you look at sort of the price quantity relationships as far as per capita consumption goes versus the prices, and demand has shifted in a positive direction, that consumers are demanding lamb. And so it's really kind of an opportunity for the industry to really step up and build that demand picture there, and really grasp the opportunity to try and really maintain their market share domestically, and really maybe keep that international product out. But I think it's going to have to come down to producers making the decision. Are they going to actually try and maybe hold back some more lands and use it and just increase that breeding flock to try and get a little bit more production there, increase some of the efficiencies with the lamb crop, and and lambing percentages. I think those are opportunities and things that but that has to start at the producer level. So I think those opportunities are there, and the prices are there as far as just the lamb prices go domestically here. So the economics are in the favor of a producer potentially making that decision if they wanted to. So anyways, that's my 2 cents on that one there, Travis.
Absolutely. Thank you. And so we have done a little bit of the economics data for our sheep that are raised here at North Dakota State University, Tyler. And so on the previous 4 years that we've had, if we were to gather that information on if we were to sell, the spring-born lambs, if we were to sell those in, June or July, or then to keep them in the fall, at least, and now we can historically look back on it, Tyler. That's the great thing about that information and data, is because then you can see if you were right or wrong, right? And so for 4 years running, it was a better idea or more profitable to sell those as feeder lambs with our scenario than it was to finish those. And so a lot of the times, even when I talk, for those that know me, home base is now North Dakota and Minnesota, working with those sheep producers of making that decision of what is the case. A couple of things that come to mind is that I'm going to call it the slide in terms of the weights or the price and weights of the lambs, right, Tyler, of the 90 pounds to the 140, is that it's actually a little less, okay, now. And so in previous years, it had been higher for those lightweight lambs, and then so you needed just a little bit more return. And so now that's a benefit that at least we can make that discussion, that people can pencil this out and see if it works for them. Because they're at least closer, or as we envision it, if we can keep it above 190, on the back end of the year, or $2, then that allows flexibility in comparison to the 230, 240, even lambs. And there's not a push in terms of increases in terms of the price of a bushel of corn, right? Or 100 bushels of corn, or 1,000 bushels of corn for us to get into our operations. And of course, even availability of hay, right? That's not outrageous. And so there is more flexibility, or at least as I read, I think producers now have the decision, because if we think about it from a North Dakota and Minnesota standpoint, but I'm just going to use the North Dakota right now, is that we are a feeder lamb exporting state, like all the time. So not many of them get fed here. A lot of them go out of state. And so people can make that decision if that's correct, or at least equip themselves with some information.
I agree. I think it's, the just the lower input costs in general through the corn and hay that you had mentioned definitely gives a lot more flexibility for the producer to make some of those decisions. But I think it's a case by case basis for these producers, depending on what their operation looks like, the size of their operation, how many lambs they're marketing, and so forth. So I think it's a case by case basis, but hopefully the information I presented here kind of gives you a better idea as far as just where things kind of stand, where they have been, and potentially where they're looking going forward.
And I appreciate, Tyler, you showing us a little bit of the breakout on feeding those lambs, right? And the decision. One of the things, even when I think about it here in July of 2024, is that as a producer, we've worked hard on our breeding decisions and the lambing and getting those lambs to weaning and going right now, is that without saying that we're going to have a lamb market outlook, without requiring that, sometimes one day a year or 2 days a year, we can focus on marketing. And if we need to take them somewhere to add some value to our operations, then hopefully we can keep that into consideration. So I appreciate that one on the transportation as well. But I would like to let you know that we have a talented team at the University of Minnesota with our sheep and goat team, and also with our collaborators at North Dakota State University. And so, Tyler, how would you send people to your website? Okay, you get to give your shout out. What information can they get from the Livestock Marketing Information Center? And we'll get closer to closing up this evening.
Sure. Yeah. So I'll just kind of bring up my last slide here. You can see at the bottom, that's our website there. So you can check us out there if you want to. Feel free to reach out to me directly if you'd like. So we do put out our forecast. We have that available as far as our sheep and lamb forecast. I gave you some highlights as far as my expectations for that. We do also do similar work as far as cattle and hogs go, and poultry. So we're kind of an in-house shop for most of the livestock stuff here. And so, you know, as I mentioned, a lot of our work is supporting the extension efforts. So we are nonprofit, we're unbiased. So we're really here to try and help support producers and just their operations, marketing of their livestock to further their operations and just be profitable. So yeah, feel free to reach out. LMIC.info, that's where we're at. We do collect information as far as prices go for a number of auctions across the U.S. as far as sheep and lamb go. So you can see that's gave you a glimpse of some of that data that we collect there. So we maintain that in house, and it's available for extension efforts such as what Travis is doing here. So we appreciate your guys' time and hopefully bring some value to you guys.
Awesome. Thank you to Dr. Tyler Cozzens, Livestock Marketing Information Center, for his time and efforts. And in fact, what he does not just today on July 10th of 2024, but throughout the year of helping us in the sheep industry, is a young gentleman that grew up in the cattle and sheep world in Colorado and is now giving back and allowing us the economics kind of insight to help us out with our decision making within our program. So I'd like to thank Tyler for joining us. I sincerely appreciate his efforts. And according to our polls, Tyler, you rocked it. Okay, so we'll check those out. And people are going to make decisions based on some of the thoughts and the information that we have. But on behalf of the University of Minnesota, where we are driven to discover, and North Dakota State University, where we are extending knowledge and changing lives, I hope that everybody has a glorious evening, and I know that we'll have a lot of people that'll watch this at a later time. And if you read those last chat comments, people are going out to go feed their lambs and get to work. So appreciate people taking the time out of their day as well. So thanks everyone for joining us. Kindly appreciate it, and have a great day and a great summer and a great year with your 2024 lamb crop. Live the dream. Take care. Bye.